Welcome to the new weekly outlook, everybody. So as always, let's go through some fundamental analysis and then go ahead and move on to the technical analysis with Stefanos.
What's up, guys? Hope everyone's having a good start to the week. Had a good Monday. Let's break down the charts so you get a good idea of what to expect for the week.
All right, let's get right into it. So today I don't have a lot of articles to go over, given that last week we've had a ton of fundamentals coming out along with a lot of economic data as well. But a quick recap on the macro fundamentals and some things to keep an eye on throughout this entire week is going to be the inflation concerns. So we know that the inflations are increasing, across the entire world, across all economies. And to combat that, interest rates are starting to increase as well, right? So a lot of central banks are being quite aggressive with their interest rate hikes. We're seeing some half basis point hikes, and we're starting to see some 75 basis point hikes as well. And now as that's starting to increase, now we're starting to see concerns around a potential recession. So a lot of economies are already in a recession. The US is already in a recession. The UK is already in a recession. And we're also expecting the entire European Union and all those countries there to also be in a recession, in the next couple of months as those interest rates are starting to increase and inflation starts to increase there as well. On top of that, we also have unemployment increasing. If you're looking at any micro data that, for example, in the US, if you're following any stocks or anything like that, you're probably familiar with it. But a lot of the big companies are starting to do layoffs. A lot of, airlines, you have tech companies, you have automobile, like any industry that you want to look into, they're all doing layoffs, right? So we're starting to see those unemployment numbers starting to increase as well. You also obviously have those geopolitical tensions, the Russia-Ukraine stuff. We don't hear too much about it in the headlines anymore, but the markets have priced that in for the most part. And so now in order for that to make any difference into the markets, you need to see any substantial changes. So that would mean, if there's more missiles being launched or if there's more attacks or, they decide to scale back now and they decide that, they're willing to come to some sort of a common ground, anything that the market hasn't seen already, basically, that's what you need to see, some substantial changes. And then you also have China and Taiwan and US along with that. So we are starting to see those tensions increasing in general. So the market has already been pricing in a lot of these things. And now, of course, for the last 2 years or so, we've had coronavirus, a new virus is starting to come out now, talking about monkeypox and vaccines and how there's potential shortages around that too. So there's a lot of tensions in general starting to increase. Now, what I want you guys to think about after such a heavy fundamental week is that what's the market sentiment like and what are we kind of setting up for, right? You can, if you go back and you look at articles that we've discussed in the last couple of weekly outlooks, and you just follows a lot of these topics, pretty much inflation, interest rates, monkeypox, unemployment, geopolitical tensions, all these type of things, you'll be able to kind of understand that we're moving towards already, some sort of a recession, and that we're already moving towards some sort of a market fear that's already being instilled across a lot of pairs, a lot of assets in general. Now, with that being said, I'm going to move on to the economic calendar and then shortly after just pass it over to Stefanos for technical analysis. So this week we started off quite easy. As you guys can see, we didn't have too much coming out, but we do have some retail sales data that came out from China. Obviously, that's starting to drop down here. We had bank holidays in the London session to start off the week. And then in New York session, again, not too much coming out. Today's Asian session's highlight is going to be the monetary policy meeting minutes from Australia, with their interest rate increases and everything like that. And then when you go down into the pre-London session, this is where we're starting to see some unemployment data. This is what you want to be paying attention to kind of understand what's happening on the micro level, because this is the type of data that translates into that high impact data. For example, when you're looking at PMI data that's coming out, when you look at retail sales that comes out, when you're looking at interest rates that's coming out, those kind of things. So this is what translates into that. And so the claim and count change and the unemployment rate. So they are expecting unemployment rate to stay the same, but they are expecting more people to claim unemployment benefits during the previous month, right? So they're expecting an increase in that, and which pretty much makes sense that they are moving into a recession. This is the normal behavior that you see in a recession. And then when you go into the London session, we have some economic sentiment coming out. The most emphasis would really be placed on the German economic sentiment, given that's the biggest economy in the entire Eurozone. So what's pretty much happening there, they're expecting a little bit of a better optimism in that sense. But really, if we do come out back below negative 53, then that tells you that, you know, the economic sentiment is starting to drop down. We're moving towards pessimism instead of optimism. Then going into New York session, we don't have too much coming out from the US, but from Canada, if you're trading, you know, USD CAD or any other Canadian pair, you have CPI data coming out. So that's something that you want to pay attention to. They're expecting a drop down in inflation. But again, that essentially just means, you know, when we look at the CPI data that came out from the US last time, it's just that you're not increasing too much. It just does not mean that you're decreasing back down or that inflation has completely stopped or that you have no inflation whatsoever. You still have inflation, it's just that you're starting to slow it down. And then going into Asian sessions after that, again, a lot of low impact news, not too much coming out though. And then going into Asian session, we have interest rates coming out from New Zealand. And so that's going to be very important. If you're trading, you know, in Asian session, you could expect some volatility from this. And then you have CPI data coming out from the UK in pre-London session on Wednesday. So again, it's very important to pay attention to a lot of these micro data that's coming out to understand what's the bigger picture like and what are we kind of moving towards, right? And so here they're, again, expecting an increase here in CPI. They're expecting things to get more expensive. And then you have inflation from the consumer's perspective, producer's perspective, and the retail side. So an entire picture of inflation and what's going on here. This is the perfect kind of picture that you could have when it comes to economic data. You're understanding inflation from every aspect of the economy. And then also inflation from, you know, when you're looking at HPI, this is the housing price index. So inflation from that perspective as well. Is there a change in the price of selling homes or no? And they are expecting that to continue to increase. Then on Wednesday is when things really start to pick up for the US, where you have core retail sales. So this is where they're expecting the retail sales to drop down, which again makes sense because as a consumer, if you start to get conservative, obviously you're not going to be spending a lot of money. Right. And you're going to expect the retail sales to drop. If the retail sales drop, then, you know, the manufacturing and production side is going to take a hit. And then it kind of ripples through that and eventually gets into your financial systems. And then we also have the FOMC meeting minutes. So after, you know, some impact here, I'm expecting like 15-minute, 30-minute time frame impacts. I'm expecting higher time frames to kind of react to the meeting minutes that are going to be coming out later in New York session on Wednesday. Then in Asian, you have unemployment change coming out from Australia. Thursday and Friday, you just end off quite easy. You don't have too much coming out. Every week we have unemployment claims. So kind of just pay attention to this and look at, you know, every week what kind of data is coming out and what does that essentially tell you. So pay attention to what's been coming out every week for August, and then that'll give you a better picture of what to expect for NFP next month. Now, with that being said, I'm going to pass it over to Stefanos.
Thank you very much. All right, let me just share my screen. All right, so we'll start with GJ over here with the weekly. Last week, we actually ended up closing a strong bearish candle over here. I'm just going to get the tools out. After rejecting 166 up here for the third time, you see that wick over here. We ended up closing a strong bearish candle, passing the low of the previous bearish candle, but below this support right here. Right, next candle comes all the way down, creates this low, past 160 flat, comes up, closes a bullish candle. This one respects the high of the previous, flips bearish and closes a strong bearish candle last week. Then we got, to start this week, we got that top wick formed, passing the low of the previous candle, heading right back down for that 160 level, right, to fill these wicks and possibly continue even farther down and hold the support right around 158 again. All right, it's a high possibility, especially with the strength of the Japanese yen as of late. Short-term strength. It's really not a strong currency, as you guys know. So here's that 166 level I was just talking about. Price just rejecting that area, not to mention the lower highs that we've just been forming since tapping into these yearly highs of 168. Move the video. So right now what you see is a strong resistance up here around 163,500. Right, price holding that resistance. You can also just move it like this. But again, as you go down the time frames, these wicks turn into a resistance. So that's where you're going to see price rejecting from and that psychological level before continuing down. But what we ended up getting here today was the support being broken and closed below, right? Strong bearish candle. What are the chances that we continue down to 160 and even further down to fill this wick over here and possibly this support over here back down to 158? It could happen. right? But expect some kind of a pullback as we've gotten over here and over here, where price ends up holding some kind of a support. You get the pullback, continue down. Somewhere find support, we get some kind of a pullback into this area, or don't be surprised if we get something coming back into this area and then continuing back down, right? There's all these different possibilities, but for now, what you understand is that we closed below 161 flat. Looking at the 4 hour looks nice so far, right? We got a nice bearish candle close after resistance formed, or resistance formed with that bearish close. Top wick formed on this candle, passed below the previous, and right now we're retesting that previous support down here, right? Once we pass that, we obviously have that 160 psychological level, but we have 159,500, our next support right here to the left with a clean move to the left, right? So what are the chances we hold this resistance and continue back down? Pretty high. This is that resistance I was talking about before, around 163,500. Price tapped in multiple times, and then ever since that last time around August 9th, we've just been pushing down over here. All right, looking at the 1 hour, after after New York close over here, we got that consolidation over here, but we got a nice resistance forming in this area, retesting this area once again. Previous support turned resistance, and price pushed all the way down into this support. So now what I'm looking for is a close below that level to continue down and retest at least 160. You have 35 pips to do so, and then you got about 60 to 70, about 80 pips back down to that 500 level, 159,500. Looking at the 30-minute, again, you see price holding support so far. You need to close below this level, especially during Asian. It's Monday. You guys don't want to like force anything. You want to stay calm, wait for your setups, wait for a nice break and retest if you get it, and then take price right down, just like you had up here and up here, which we were able to grab today. So these are the setups you look for if you're going to be trading Asian. More so this setup right here in the hour. We get that hour close, respect the high, flip bearish, we continue right back down. Those are the setups you want, not experimental. Let me take a buy off this support right here. Just wait for price to play out and wait for ranges to clear out. All right, looking at gold over here, since tapping into the yearly highs, all-time highs, 2075, we've been in that bearish trend. Printing lower lows, lower highs. We recently just broke it. We can always adjust it as we go down the time frames, but so far here on the weekly, it looks like we broke that. We tapped into 1680, and we've been bullish for a month over here, right? The current monthly candle is now reacting to a previous, or current weekly candles reacting to a previous support right here, right? We're holding a resistance. Can we continue down to 1680 and tap that area? Right, especially, I mean, it really depends on Fed meeting minutes. We'll see what they have to say. If they're hawkish by any chance, or we get retail sales coming out, that could send gold down as well.
It's also the macro fundamentals in general. When you start to see things calming down a little bit and more optimism kicking into the markets, that's when you expect a lot of these safe haven currencies and commodities to drop back down in price.
100%. Yeah, since tapping in the 1680, what I also noticed here too was the bullish trend that we had. Price was respecting over here, and then we ended up approaching this previous support, and then you get that hard rejection, and you're going to start to see price rejecting multiple times up here and showing that we could very well be holding that resistance and continuing down. I really want to see that close below this level here on the daily, and if so, we could very well be taking price down into 1750 again and even further down. Again, if we get that optimism. So now this is that 1 hour bullish trend that we were respecting over here. Then since tapping into this area up here around 1800, we reject multiple times, right? And then we get that hard final push over here. So what you're looking for is some kind of a close below support. Actually, you know what I do like is we had this previous support over here And then what you ended up doing was getting a perfect retest of this area. Grab liquidity, close a strong engulfing 4-hour candle. So far, we have a top wick on that one and breaking the low of the previous. If it does, can we continue down into our next support of 1772 and fill this wick? And see what this level looks like on the lower time frames. It's even valid. It's valid. Yeah, you got a level right there that you may want to be cautious about. Previous resistance over here, previous support rejected multiple times, failed to break below over here. But I do like this setup where if you get volume pushing in during London or Asian, if we break the low of these wicks, can we continue down into this level over here? Especially after the strong bearish candle closes over here. You get weak bullish candle closes, holding a resistance. Top wick forms, passing the low, possibly continue down.
Yep.
Let's see. 30-minute gets a little choppy right here. So right now, 30-minute, you may want to wait for that close below this level, right? You got something like this close. Excuse my artwork. If you get something like that, I could see us continuing right back down with some Asian volume. Just keep in mind, you want to lower your risk. It's Monday and it's Asian session. So don't try to force anything. You have plenty of volume coming up this week and just be smart. Don't trade in this. Just wait for price to possibly break out of here. Even that's a little tricky. Maybe hop over to the 1 hour and wait for that 1 hour to close around this level. Wait for the next one to create a top wick, pass the low of that one, and you got plenty of range in here to do so.
I would say, when you're looking for trades like this where price is setting up, use higher time frame confluence to kind of understand where price is headed. But once you start going up to that 4 hour or the daily time frame, if you could go up to the daily time frame for me, Stefanos. Sure. I think one important thing to understand here as well is that we're still kind of in this bullish structure. If you want to zoom out a bit more.
Yes.
So I think it's important to understand that we are still kind of in this bullish structure where price is giving you these retest and like corrective moves along the way. So I do see that, price could probably come back into a deeper level somewhere here. And maybe if we look to the left in 1760, we could probably see if there's any more wick projections or anything like that. And then a continuation back up as, more fear is starting to come into the market. Recessions, inflation, all that type of stuff. But I do expect to see some sort of corrective moves because even though we've had a massive push up from the 1680 level, if you hop back up to even a higher time frame, which is a weekly time frame, please. So when you look at the weekly time frame, you've been insanely bullish. So this is where we need to see that price, retracements and things like that. And so this is where that 1760 level comes in, where price has held on to this area as a very strong support. You had a nice little break and retest before another push up. So again, this is where a lot of liquidity is. So maybe we could see a deeper pullback into 1760, and that could be the sell opportunity that we can take advantage of going into Wednesday with retail sales and FOMC meetings, meetings minutes and things like that. Maybe leading up to that, and then after that, we could see like another push right back up.
Yeah, absolutely. When you were talking about that pullback, that could very well happen anywhere in these areas.
Yeah.
Right. Like it's kind of due for something like that where it kind of traps people. But once you start approaching this previous support and you get a candle like that, you could very well take this down, at least down into this area. Just like Sharma likes to say, understand the limitation of your trade and just be aware. What I do like, though, too, is the 4 hour and how strong this move was. Right. Then we get the small correction with a nice 4 hour candle close. Could we get an identical move right there, right over here down into like this area and fill this wick, right? And start approaching this area right here to the left, right? And then after that, maybe price either ends up bouncing off that level and continuing up or bouncing off from up here, down here and continuing up from there. I don't know if you guys can follow these boxes, but I hope that makes sense for you.
100%.
So like that, or we could even pull back even farther and continue up, or we're just continuing down from here.
Yeah, and for us to continue back down into those 1680 areas from a fundamental perspective, you need more optimism, which we obviously don't have right now. With that being said, I think we're pretty much done with the weekly outlook. As always, make sure you guys are trading safe. So this week, I guess we will be trading on Wednesday for the core retail sales, right?
Yep.
So we will see you guys on Wednesday for the core retail sales. We'll start like around usually the same time that we usually start, which is 4:30 a.m. PST, which on the East Coast is 7:30 a.m. Right?
Yep.
So we're going to see you guys then on Wednesday. But other than that, if you guys have any questions, always feel free to reach out to either of us. And we hope this has been very helpful for you guys.
Yep. Absolutely, guys. Have a great night. All right.